Hi, welcome to Finance for Fridays. This is your weekly 5-minute dose of real estate and home financing information. Hey, I'm Haley Jones. I'm a real estate agent brokered by eXp, and I'm based out of Knoxville, Tennessee.
And I'm Shay Martin. I'm a loan officer here with Mortgage Investors Group, also based out of Knoxville. And today, I thought it would be a good topic for us to talk about money. It's Finance Friday. Of course, we're talking about money.
Show me the money.
But specifically, how much do people need to buy a house? I know I get asked this question a lot, and I'm sure you get asked this question, Haley. When someone starts the process, they say, how much am I going to need? When am I going to need to pay this money? So really today we thought it would be a good idea, not so much down payment and things like that, because obviously that's going to vary by borrower, by customer, by loan program, all of that good stuff. But today we really want to talk about what's your upfront cost. So when you get under a contract, what can you expect to spend? When are you going to have to put that money towards your deal, and how much can you expect? So really, I think, Haley, you're going to be the star of the show today because few of the things that people have to pay when they get under contract really start on with the real estate agent and that side of things. So I'll let you kind of talk a little bit about what can someone expect when they initially get under contract.
So initially we have three things, and I'm going to speak to two of those, and Shay will talk about the other. So first thing is earnest money. So this is basically like you saying, hey, I want this house and I'm going to put this money to you up front. And rule of thumb is that earnest money is somewhere between 1 and 3%. However, 1 to 3% of the purchase price. So whatever you're offering, 1% of that amount, up to 3. However, I have only seen that amount probably 1 or 2 times. Most people do just like a general $1,000. If you're, over 350,000, you're probably going to want to do more than that. But I've also seen offers with $500 of earnest money. So, and it just really depends. And why that's important.
And that's interesting because I see a lot of different contracts with a lot of different amounts, and I've always wondered, how is, I'm not on that side. So when they're writing the contract, so I'm always curious, how is this number determined? Does someone just say, okay, this is how much, or does the agent set that? So it is just kind of a typical rule of thumb that you guys follow.
Yeah, well, and honestly, people know what they want to put, or they're like, not too much or whatever. And so you can get that earnest money back. It just is contractually, just depends on some things. But within your contract, you say how quickly you're going to have that earnest money, like to the title company or being held in escrow. So usually that's like 3 days or 5 days. So within 3 to 5 days of being under contract, you write that check for earnest money. And that amount goes to the purchase price. And then the other thing
that's a good point I do want to speak to. The earnest money, just so people know, that is your initial deposit. And so from my side of things, a lot of people don't even necessarily realize this when they're writing that earnest money check, but that will actually be credited to you at closing. So that is a deposit towards your purchase. So that comes off your bottom line at closing. So you do get that money back, because it used to be called like trust money, good faith money. So it's basically, from our side of things, that's your initial deposit on the house, and that does go towards your final amount needed at closing.
Right. And then I'm like thinking of all these ways you get earnest money back, but that's like a whole other topic. Okay, so the other thing.
Yeah, that's probably a topic for another day, but just expect first cost, you're going to have to put some earnest money down to look serious.
Yes. So pretty soon after you get under contract, you also have the home inspection, obviously, unless you are waiving it. I know a lot of people right now, they're waiving them. So inspection, depending on how old the house is, the inspection company you use, and the different parts of inspection you do, an inspection could range from $300 to $1,000, just depending. More typical is somewhere in the like high 4s, but some companies like, I'm thinking of one specifically, they'll do the whole kit and caboodle, and it's mold and mildew, and they do a LiDAR, like radar measurement of your whole house. And so it really just depends. Now you do often homes that are older than I think 1950, some companies will charge like a $95 fee because there's more to inspect because it's an older property. But you can, I would say budget about 500. That's the high end. But I think that's probably the close amount. So you're going to need that within a week or so of the inspection. So in order to get your inspection results, that inspection has to be paid. You don't have to pay it to book it, but you do, in order to get your results, you have to have your inspection paid for. Oh,
I was going to ask that question, is when do you actually have to pay for that?
Yes. Yeah. You have to pay for that before you see your actual results. And then the other thing is termite inspection. And that is just a flat $60. And that's to get your termite letter. So those are pretty upfront. And then Shay, if you'll talk about also getting your appraisal inspection.
Yeah. So first, let me back up and let me touch on the termite inspection. That's also one thing. In East Tennessee, we typically always recommend people do get a termite inspection. I know from the real estate side you do, but talk with your lender. You might not actually have to have a termite letter for your loan. So I know some, and this is, again, I'm not on that side, but I do know from hearing people talk that some home inspectors will do the termite inspection, as in look for evidence and things like that, but they can't provide you with an actual letter. So you don't necessarily have to pay that extra $50. So talk with your lender and see if that's something that you actually have to have that letter, because that could be something that saves you, again, $50, $60. But, if it's not required, then you could just have that peace of mind of knowing they looked for it, but you don't have to have that official letter, because that's usually what they charge for, is the letter versus just looking for the activity in the home inspection.
Well, and sometimes too, and your agent will know this, but the house you're buying may already have a termite mitigation system. And so you can also get documentation. If you're concerned about termites and like your lender doesn't require it, then you can have the documentation already that it's treated or there's no problem. So, yeah. Anyway.
And again, from your side of things, but I would just always recommend people ask the home inspector if you have concerns or what they recommend as far as the termite side of things. But yeah, people ask me all the time, how much is my home inspection going to cost? And I really have no idea, because I'm not involved in that side of it at all. So it's good to know what they're running right now. And I do know, I think some people, based on square footage and things like that, they'll change their cost. So it is interesting that it does vary that much by house. But that leads us to our next thing, and we'll dig into really more the details of what the difference in these two items are. But the next cost that you can expect would be your appraisal cost. So typically the appraisal fee is collected up front. This is because we as lender, we have to pay the appraiser regardless of not if you close on the house. So we collect that fee from you up front. As far as as far as MIG goes, that's the only upfront cost we do collect from you. And it is credited towards your bottom line at closing. So the appraisal is part of your standard closing costs, but again, we collect that up front, so it's going to come off your bottom line at closing. For us, typical appraisal fee is going to be $450, unless you are doing like a VA loan. VA sets their appraisal costs, and those can range, depending on the county, from $500 to like $575. So VA is going to be a little bit different, but for our standard conventional FHA, USDA, those appraisals are going to be $450. We are seeing now with appraisers being a little bit busier, sometimes they'll ask for a little bit more money, but that initial amount that we'll collect from you and disclose to you is going to be that $450. So that's another upfront cost that you can expect, just again, so that we can pay that appraiser upfront. Same as kind of with the home inspection. If you ready to move forward and you want to accomplish that part of the process, you got to go ahead and pay for it.
So that, if we just think like, say we're going under contract on a $300,000 house. So $1,000 earnest money would be acceptable on that. So $1,000 earnest money, $500 for inspection, and that's a high estimate. That should have you covered. And then $450 for appraisal puts you right under $2,000.
Exactly.
So that's kind of, the rough idea of what you would be.
And like I said, that earnest money and that appraisal fee are coming off your bottom line. So you're essentially getting that money back. From my side of things, obviously the inspection, you don't get that money back because you're paying for an actual service there too. So, So I think that kind of sums it up as far as what you can expect as far as upfront costs go. And again, you're going to have costs due at closing, but that is at closing is when your down payment, closing costs that you're responsible for, the remaining portion of all of that will be due at closing. So you will just write one check for the rest of that due at closing. So really upfront costs, three main things: earnest money, inspection, appraisal. And I think we've summed it up. It's going to be about $2,000, or give or take, obviously.
Yeah, give or take.
About what you can expect. So, Yeah. So I think that kind of covers what people can expect as far as that front. Once you get under contract, it's, plan to have a little bit of money in the bank for those first costs.
Yes, for sure. But they are worth it. I don't want you to be thinking like, oh my gosh, I think all of these things are totally worth it. So anyways, yeah. And really the only one that you're not going to get back, well, depending on how far in the process, you may lose out on your inspection money. Like if the inspection comes back and it's horrible, you may be out that $500. You know what I mean? And if you haven't done it,
that's a piece of mind.
Yes. Well, if the roof's falling in,
you aren't going to have to spend thousands of dollars on a house later.
Exactly. So it's money well spent. So anyway,
sure.
Yeah. So I think that's everything. Like we said, again, I'm Haley Jones at the XP. I am your real estate person here in the Knoxville area.
And I'm Shay Martin with Mortgage Investors Group. I am your trusted loan advisor here in Knoxville, Tennessee.
So thanks for
I think join us next week.
Yes.
Are we going to talk about the difference between home inspections and appraisals? Since we've kind of talked about those today, we'll dig into the differences of those a little bit more next week.
Awesome. I'm excited. All right. Have a great Friday, a great weekend, guys.
See ya.